Marshall here. Welcome back to the Realignment. Everyone, welcome back to the show. We're airing an episode on Friday because thanks to our Supercast subscribers, we are now publishing extra content every single week that everyone has access to. Of course, those of you who subscribe to the Supercast will also get access to bonus and community content, but the show expansion is our number one priority coming out of our Ukraine series. So to make it very clear, if you have not gotten the chance yet, our Supercast can be subscribed to at the top of the show notes. If you click on this episode, you will see a link to the Supercast, $5 a month, $50 a year, $500 for a lifetime membership. It is so important. Helps us support the show. If we get 3% of you to subscribe, we'll be more than covered as we move forward during this first year. We're incredibly excited. Also, because it's Friday, we're going to be sending out our Substack as well. So subscribe to our Substack to get audience response, conversation, all the good things, links to the show, stuff like that. That is also right below the Supercast link in the show notes as well. Today's episode is one I've wanted to do ever since we got so much feedback during Sagar, my episode on student loans last week. I'm speaking with Josh Mitchell of the Wall Street Journal. His book is The Debt Trap: How Student Loans Became a National Catastrophe. During Sagar and my discussion episode, we got so much audience feedback. I've never gotten that much on any topic. People had all sorts of ideas and perspectives. We'll be sure to include that in the Substack that's going out this morning, but would love to hear more from people. So you can send us an email at realignmentpod@gmail.com. You can comment on the Substack. All those are the good things. We're also recording another discussion episode to come out this Tuesday, so we'll have more content coming there. Hope you enjoy all of this. It's really great. Huge thank you to Lincoln Network for supporting our work. Lincoln has announced an awesome new fellowship for anyone who's interested in technology. It's called the Endless Frontiers Fellowship. There's a link to that as well. Lots of links today, but definitely be sure to check that out if you want to get interested in the technology industry. All that said, would love to get more Supercast supporters. Would love to get more subscribers. Would love for folks to check out the actual books and things we do here. Hope you enjoy this episode. Josh Mitchell, welcome to the Realignment.
Yes, thanks. I'm glad to be here.
Yeah, this is going to be an episode where you answer as many audience and even my own questions about the student debt issue. Let's just start with the most basic question that I honestly have a bias on, but I'd like to hear your perspective. Is the student debt crisis a crisis?
Yes. I get asked this all the time. So if you look at how many people are in default, if you look at how many people are in distress, if you look at how many people are quote unquote underwater on their student loans, where they owe more than they started out with, and the balance is rising, not going down. If you look at the impact it's having on their ability to qualify for a home loan or a car loan or to move to the city of their choice, I think it's clearly a crisis. Let me just give you some context. Before the pandemic, there was somewhere between 5 million and 8 million people who were in default on their student loans. The education department, sort of offers a rough estimate because some people have more than one loan, but let's just say it's about 8 million people. That's roughly how many people lost their homes to foreclosure after the housing crisis. If you look at the amount of student debt that, again, before the pandemic and this forbearance period was delinquent, 1 in 4 people in the repayment cycle were 3 months behind on their student loans. That is more than double the amount of mortgage debt that was 3 months behind at the height of the housing crisis. In fact, I would say this is the biggest default crisis, consumer default crisis, probably in the history of mankind. And the reason why I think a lot of people don't think it's a crisis is because banks aren't really involved, at least not to the extent that mortgages were. What I mean by that was if this debt was all on the private sector's books and it was not backed by taxpayers, there would be a financial crisis. But because the Treasury Department, because the US Treasury can, just simply run up the deficit and cover these losses by, taking on more debt itself, there's no financial crisis. And so there's no quote unquote systemic crisis. And so I say this is like the frog boiling in the pot and it doesn't know it's boiling. If you look at all these impacts that it's having on human beings, it's a crisis. But because it's not, bringing down the financial system, I think people think everything is fine.
That's interesting because what you just said is that there are two different definitions of crisis. And part of the difficulty here comes there's the financial crisis with its spillover effects, but also there's just if you are, once again, one of those 1 in 4 people behind on their things, that's definitely a crisis. And there's lots of stories of people who are going through that. I want to raise another debt issue that comes up that people raise. You've heard this before. Start of the episode's going to be very, very obvious questions, but credit card debt. Obviously, student loans are higher than credit card debt. Correct me if that's incorrect, but we wouldn't define that as a crisis, or would we? How do you think about that counterexample that people often bring up in this context?
Sure. No, I think that that's a very important question. And I've thought about this myself a lot. I think there's differences between auto debt, credit card debt, and mortgage debt. And we're really talking about post 2010 because, before 2010, with the housing crisis, for example, there was a lot of predatory subprime lending. And so, we really have to compare different types of debt, I think, post crisis. And so what I would say about credit card debt or auto debt or home debt is that number one, there's underwriting. And so you have to qualify. You have to show that you're credit worthy to get an extension of debt. And so, in some ways, there's like guardrails when you take out different types of consumer loans. On top of that, when you have credit card debt and auto debt and mortgage debt, you have access to bankruptcy. You have an escape hatch. And so if you find yourself in trouble, you get a chance to start over fresh. Now, there is a little bit of a misconception about bankruptcy and student debt. And a lot of people say that it's impossible to discharge your debt in bankruptcy. That's actually not true, but it is a very high threshold. And it's much harder to use bankruptcy for student loans as it is for other forms of debt. But again, I think there's a difference here. And think about who the students are. You are 18 years old. Here's the policy of the United States. This is the policy. Anyone who has a pulse, regardless of their credit history, regardless of their age, basically, regardless of their financial background, gets a blank check to spend whatever amount of money to go to any school, regardless of the quality of the school, regardless of how expensive the school is, to study any major, regardless of the earning potential. I mean, we would call this predatory lending in any other space. And lo and behold, there's a lot of toxic debt out there that is not going to get repaid. And then these students come out and they don't have access to an escape hatch. And as you really truly have people who are 18 and 19 years old truly don't know what they're getting into. And I'm not saying this is every case, but I'm saying there are millions of people like this who, by pressing a computer key, all of a sudden owe tens of thousands of dollars. And everyone should think about what their mindset was like when they were 18 and 19 years old. So I do think that there are very key differences between credit card debt and student debt.
And apologies, I looked down a lot. I wrote questions down on my notes app as I was walking around listening to the book. That brings to mind what you basically describe in the book as the central tension here, which is we as a society have decided that we want higher education aspirationally to be as universal as possible.
Yep.
We're not Germany. We're not going to sort people into vocational schools at 20, at age 14. Something of it, I had a lot of German exchange students growing up. I don't advocate for that type of system. I think there's something kind of depressing about it really mattering how you're vibing from 10 to 14 in terms of determining your future.
Yeah.
So we want this to be as universal as possible, but we recognize it costs money. How do you pay for it? The way, and you put it this way, is we decided the way you pay for it is loans. So can you just expand out this bind that basically sums, because then we'll get back to what you were just saying, but I think understanding this bind is really core.
Right. Yeah. Again, there's a lot of other countries that have student loan programs, but I think the difference in the United States is that we do have this idea that everyone should go to college. Other countries, it's hard to get into college. We have a lot of open access colleges, and I think it's mostly important. I think it's very important to understand this. The biggest driver of student debt over the past 15 years are not people going to your public four-year college, your typical public four-year college that has high admission standards. It really is a lot of people who went to quote unquote open access colleges, community colleges, for-profit schools, some HBCUs, historically Black colleges. And these are really schools that are taking in, students that are considered to be high risk. They're at a high risk of dropping out. They might have not, gotten the best K through 12 education, but as a society, we don't want to like turn our backs on them and say, okay, just because, you're 18 years old now and, you had access to K through 12, free K through 12, maybe you didn't get the best education. So we want you as a society to have an opportunity to, to advance your skills. The problem is that it was never really the intention of students who are at such a high risk of dropping out or failing college to get loans. And so it's that combination of basically giving everyone access to a loan, regardless of their academic background or the quality of the school, to basically be able to take on debt. And what we've seen is there's a lot of people defaulting on their loans. And this has happened throughout time. I think there's like this misconception that the student debt crisis blew up in the past 20 years. I argue in my book that that's largely, where a lot of the debt came, a lot of the run up in debt happened in the past 15 years. But there was a for-profit college crisis in the Reagan era. And so we've seen this happen throughout time, just on a smaller scale, that, students who are at a high risk of dropping out, going to bad programs, are defaulting on their loans.
And I wanted to hit the point you just made, because earlier I could hear someone hearing you say, well, they don't really have that many guardrails when it comes to student loan debt, unlike mortgages, credit cards, auto payments. And I could see someone thinking, okay, the solution is to add more guardrails. But the second you start adding guardrails, it gets very deeply uncomfortable. So for example, a guardrail could be, okay, are you going to be pursuing a degree that's going to have a high chance of employing you gainfully? Now, I'm a political science major who didn't go to law school. So literally, this is purely, it was good podcaster prep. It's not good prep for any background there. But like, I'm from an upper middle class family. My dad has a PhD, my mom's a lawyer. Under a system of guardrails, I would be totally good to go to study whatever. It makes me really uncomfortable to say guardrails, recognizing what that effectively means is a lot of folks are being funneled into something they don't want to take. So can you just talk about this part of the dynamic? Because it's always the one that catches me.
Yeah, of course. Every time you're really hitting on the key points here. I'm really glad about that. Every time there's been a talk about accountability, making sure schools, are held accountable when they don't provide a good education or they fail their students. And that, there's always talk that comes up about how the federal government needs to punish these schools or deny students access to loans if they go to these schools, because they're just going to inevitably drop out. Every time that happens, schools and a lot of advocates of the student loan program will say, wait a minute, you can't do that because these schools are serving the students from the most disadvantaged backgrounds. And if you force them to, one of the reasons, probably the main reason they say that they have such bad track records, low graduation rates, high default rates among their students, is not because the schools are doing anything wrong. It's because the students came from such a disadvantaged background and they just aren't prepared for college. And so don't punish the school. And also if you close these schools, you're going to deny, access to college for society's most disadvantaged students. I think that there's, a strong argument to be made there. This sort of gets to the end of my book where I try to offer certain ideas about how to achieve these different goals that we have. On the one hand, I think everyone would agree we don't want students taking out loans that they're inevitably going to default on. On the other hand, as we've been talking about as a society, I think most people, not all, there are a lot of people, there are a significant number of people who say, hey, if you can't pass a certain, if you can't pass a test showing a certain academic ability, then no, you shouldn't go to college. You should just, enter the workplace and try something else. But I do say at the end of the book that, this is what community college, I think, was for. Community college is really supposed to be, I think, that last ditch option for people who do need access to college to learn new skills. And so, I don't think, I think that a lot of times we get so used to the status quo that, we equate student loans with access. It's like, okay, if certain people don't have access to student loans, then they're not going to have access to college at all, and that's awful. And I try to sort of expand the boundaries of the discussion in my book by saying, wait a minute, there are other options. You could fund up community colleges, truly make them free, because a lot of defaults happen at people who go to community college. You could truly make community college free. You can give access to college without automatically giving debt right away to someone who's had a high risk of dropping out. I do think that there are other options.
So you just said something useful and interesting. A lot of defaults happen to people who go to community college. How is that possible? Community college is cheap.
Not necessarily. A lot of student debt is living expenses. And so the cost of attendance includes both tuition and living costs, things like transportation, things like if you live in a dormitory or if you live off campus, you get a certain stipend that you can take out student loans to cover. And so don't quote me on this, but I believe the average cost of attendance after you factor in Pell Grants, any type of scholarship money to go to community college is like $12,000 a year. Most defaults, this is counterintuitive, but most people who default on their loans actually owe under $10,000. They owe between $5,000 and $10,000. And these, again, are people who typically drop out. And it's not just community colleges. They go to a for-profit college or a 6-month certificate program. And I think it's important to understand this, and we can get into this if you want later on, but let me just mention this real quick. There was a national student loan program before the federal student loan program. This was in the early 1960s. And this program was funded by corporate CEOs. Corporate CEOs basically said at the time, America needs more skilled workers. We have these companies that are growing. We want access to more workers that went to college. And so let's put money in an insurance pot and use that to incentivize banks to make loans to students. And this program was actually pretty robust. It was growing very quickly in the early 60s, right before the 1965 Higher Education Act. And it had very low default rates. And so it essentially did what the current program does, but it had key differences. And one of the key differences was that the program didn't lend to freshmen because they knew that freshmen have always been at a high risk of dropping out. And you're setting students up for failure if you give them loans before they prove that they're going to be able to persist through their studies. So again, as I researched this and thought about this, I was like, okay, there are things that have been tried that have succeeded. And again, I go back to, I agree with you. I get uncomfortable with the idea of just sort of, telling someone who grew up from an underprivileged background, hey, it's too bad. Sorry, you're on your own.
Go to the STEM mines.
Yeah. But I also feel equally bad, going to that person and saying, here's a $20,000 check. Go to this for-profit college, and increasingly their parents and grandparents are taking out debt. And I've talked to so many people who just have these horror stories. So both of those cases make me uncomfortable. And that's why I'm thinking, what is the third option?
And what's interesting is and this is why it's such a for such a wonky topic, this is super value driven in terms of what trade-offs you're willing to accept. And my reaction to the way you just framed that, okay, saying no to someone because they're working class operationally versus here's a $20K check, at least for the $20K check, and this probably explains why we have the policy, at least the agency is on them. Mm-hmm. At least if they decide to, and once again, it's complicated, they decide, right? Insert statement, assume maximum possible agency. It's at least up to that freshman, sophomore, junior, senior to succeed or not within their control.
Yeah.
I right now am more comfortable taking that risk than saying no. But once again, that gets at the difficulty.
But right. And I hear you. I very much value agency and personal responsibility. For me, what's tricky is that I go back to like 18, 19, 20 years old. Truth be told, there's actually a lot of adult students, sure, you're 20. Yes, you are no longer a child, but there are older adults who are also taking out loans that they're defaulting on. But when we talk about agency, so I get it, but let's be practical. They're defaulting. I mean, it is what it is. We have given them agency, and this experiment that's been going on for 50 years. I mean, we can assess it. We have a lot of evidence to assess what the result of giving someone a $20,000 check or $10,000 check, or in some cases $50,000 check, what that is. And the result is we have tons and tons of people defaulting on loans, or they have to go into income-based repayment, and can spend sometimes 30 years, 25, 30 years under debt, paying that off. And that's preventing them from doing a lot of other things. So point is that I hear the argument, but I think that the results, the practical results are in, and I think they're bad.
And what's interesting, given what you're saying, I want to go back to this point that most defaulters are actually below, 10K in debt. Yeah. That brings to mind a complicated talking point here, because I'm noticing there are a lot of talking points that folks are using. When we just play someone, this could be basically anyone who's critiquing the higher education system. These schools have recreation centers that are the quality of a Cancun resort. They've hired all these woke DEI inclusion people who've jumped up the costs. The dorms are hotels, this, and that. I think to certain degrees, those critiques can be quite accurate, especially at flagship state universities. I went to the University of Oregon. The gym did not have to be quite that nice, but thank you, Phil Knight. But there's something to that. But at the same time, that every single thing I just listed out doesn't seem to be the primary issue driving the cost of the defaulters, right? So that community, even because think about it this way, even that community college education, you said $12K a year, expenses, education, whatever, $24K, 2 years. We've even talked about this, but as an investment, that should be a good $24,000 investment, right? There's this huge issue of community college attendees but I guess you're probably going to say this, that oftentimes the people with the debt didn't even graduate. So they're not actually getting them. So I'll stop. I'll let the expert talk, but just what is going on there? Because what I was trying to get at is so much of the conventional dunk on the higher ed system doesn't seem to actually apply to the most sympathetic people in this story. Your issue, if you're that community college dropout, isn't that there's a woke administrator with a super nice gym. Yeah. What's your reflection on that?
So yes, great question. So we haven't even gotten to this, but now is probably a good time for me to bring this up. I think that there are 2 or 3 buckets of problems. One bucket is people who are relatively small amounts who are defaulting because they dropped out. And typically these people went to open access colleges. Okay. And what I mean by open access is there's no admission standards. You basically can get in regardless of how you tested on the SAT or what your GPA was. Okay. That is one distinct group. And if you're looking at the problem of defaults, it's that group. There is a separate, and I think very big problem of people who are taking on larger amounts of student debt. I call these the jumbo balance student debt students, and I say jumbo balance because back in the housing crisis, there were jumbo mortgages. And so these are people, and they're not the typical borrower, but they're a fast growing minority of borrowers, a fast growing slice that have 40,000, 50,000 and more. Even after you adjust for inflation, that group owing 50,000 and more has grown very quickly. And a lot of these people went to 4-year colleges, but also graduate school. Graduate school is something like 40% of all student debt. And these are people that, they're taking on high amounts of debt, and they're not in default because they typically graduate, they get the degree, but then they end up owing so much that they can't make their monthly payment without spreading the payments into like a 30-year plan. So it used to be in the 1990s. In the 1990s, on average, students who took out a loan repaid that loan within 10 years plus interest after they left school. And now the average, starting around, I think it was like 2015 or 2016, whereas it used to be you would pay 104% of your balance within 10 years. Now it's 78% of your balance, because so much of it is interest and the principal is getting higher and higher. And so what used to be like a 10-year repayment plan is now for most people a 30-year repayment plan, because they have to spread these payments over a much longer period of time just to make the monthly payment and not being in default. And so they're avoiding being in default, but over the long run, they're paying so much more overall than they had been in the 80s and 90s. So those people aren't defaulting, but I do think it's depriving them of the ability to save for retirement, to save for a house, to start a business. And so I argue in my book, like, just because they're not in default doesn't mean that's not a problem. But it is a very different, distinct group than the first group. But I still think these are two problems that we should be talking about. Now, when we're talking about colleges and what's driving the costs, again, if you're looking at the second group, the people with big student loan amounts, I do think there is something to be said for colleges just sort of spending in a reckless way. This is not every college, but there is a certain number of colleges that are. And I'll just give you a quick story. I was interviewing Stephen Joel Trachtenberg. He was, I think Slate called him like the priest of runaway college tuition. Very great headline that they had on a profile of him. And he was the president of George Washington University, which at one point was like the most expensive college in the country. It's a private college in Washington, D.C. And he retired a few years ago. And so I interviewed him in DC, and he told me, he goes, look, we wanted to raise tuition so that we could afford to pay our professors more and just offer a better product. He goes, but I will admit, that college as an industry is a very inefficient operation. We operate 9 months of the year, 4 days a week, for the most part, because most students take off on Friday, don't really take any classes on Friday, and our professors weren't working on Fridays. And so, he said that he had this idea of, let's operate every day of the week for 12 months of the year, look at all the capacity that we could get. We can graduate students in 3 years instead of 4. We would be a much more efficient operation. We'd be able to save students money. We'd be much more efficient. And as soon as that he proposed that, he said the faculty senate, like, immediately rejected that. So, I think schools have gotten away for too long of accepting the status quo, and not only like spending a lot of money, but also like just operating in an extremely inefficient way, which has driven up costs.
So here's a question to go back to that whole idea of we want this to be universal versus then needing to pay for it with student loans. Why don't we just conceptually treat higher education the way we treat K through 12 education? This is a public good. This is important. You could go to private school if you want. You could pay for it if you want, but there should be a robust federal, state, whatever, taxpayer funded version. Like, why did we not continue the logic of expanding? Because once again, you talk about this in the book, but key early 20th century idea, making high school mandatory, right? So like secondary education, primary education, why didn't at the second half of the 20th century we say, okay, there's now this third level of education that will continue in that track because this is a Sputnik era public good?
Yeah. Okay. So interestingly enough, the short answer to your question is money. It would be very expensive, but there was actually a broader philosophical debate that was occurring in the 50s, and this was right after World War II. Congress was debating essentially free college. They were having the same debate that we're having now, which is paying for higher education the responsibility of Washington, or is it the responsibility of households? And at the time, this was the McCarthy era, where every time the Democrats sort of talked about, providing free education or getting Washington involved by, using federal money, to help make college free, they were accused of being so socialists. This was during the McCarthy era. And so really, and I went through the transcripts to sort of understand what the arguments were for why Congress ultimately created the loan program. It was right after Sputnik, actually, that Congress got into business of student loans. And the idea was, let's get more people into college so that we can get more scientists and engineers to reclaim the space race and beat the Soviet Union in the space race. But Congress decided on student loans in part because there was this idea that, it is the American way to have people work for, to pick themselves up by the bootstraps and pay their own way. So it was really sort of like a philosophical cultural argument that both parties ended up standing behind. Lyndon Johnson himself, who, he was the one that really championed the idea of not just having a student loan program for engineers and scientists, but for everyone. He borrowed a student loan himself to go to Southwest Texas State Teachers College when he was a teenager. And, he was really proud of the fact that, he had access to that loan. It was key to him being able to actually go to this college, but that he also worked side jobs and worked off paying that loan. And so there's always been this concept, that college is something that, households should pay on their own. Milton Friedman, by the way, had a whole essay that explained why K through 12, as a society, every society needs a minimum level of education, but once you get past a minimum level, really the benefits start to accrue at the individual level. And so, beyond K through 12, because the individuals are going to benefit so much from higher incomes, they should, invest in themselves and pay off that money themselves. It's this really wonkish essay that Milton Friedman wrote in the 50s, but yeah.
You gave me the good top line there. And I guess my problem is I'm inclined to directionally agree with that argument.
Yeah.
In the sense that one of my favorite sort of like left-wing academic-y phrases is social construction.
Yeah.
And I have a hard time not looking at so much of the higher education system today and concluding that, okay, a lot of the benefits, a lot of the you need to do this is purely a social construction. By which that means, it means that we just as a society of like, and by the way, there will be some grad professors listening to this who will attack my definition. Basically, social construction just means we have semi-arbitrarily just sat down and said, hey, like we've decided that a person who has a BA has this amount of value versus someone who only has a high school education. Now there's no like test that happens after high school post SAT to actually measure this. It's kind of amorphous, but we just have collectively agreed. And to your point, there's over 3,000 colleges, universities in the United States, and they all technically grant BAs/BSs. And obviously Yale is not the same as San Marcos Teachers College, which is where LBJ went. And, talk about open access college, like that's what it was, right? Like, if you read your Robert Caro, like this was not a good school. In terms of that overall, so this is definitely a school which he should not have been paying money for, IMO, relative to like public education and access universal different. It's much more akin to the community college that you're speaking about here, but it grants a BA the same way Yale does, the same way Harvard does. So that's what social construction means. So what actually is the like, this is a public good. There's actual benefits beyond just the social construction argument. Once we move beyond science, engineering, technology, the profession. So, doctors, lawyers, et cetera, accountants, that bit.
Right. Okay. So I think the main argument, and again, I hope professors don't come yelling at me about this, but I've learned to take my hits. But I think the argument is that there is a college wage premium, meaning that the college wage premium is the difference between what a college graduate earns on average versus someone who never went to college, who only went to high school. Okay, and that gap opened up very wide in the 80s and 90s, and since around the early 2000s, it's been kind of stable, but it's still been like at near an all-time high. It's gone down a little bit, but there's been since the early 2000s a very big gap. And the argument from I would say mostly the progressive side, but not just progressives, but in general, people who think that college is a public good, is that employers are willing to spend more money to hire a college graduate, because in theory, this proves that college graduates are more productive. Because otherwise employers wouldn't be willing to pay more. And so the fact that employers are willing to pay more means that there is something inherently more productive about college graduates. There's this sense that like you learn skills that are valued in the workplace. And so that makes employers more productive, which makes the country more productive. And if you know economics, the key to raising living standards over the long run, which everyone benefits from, and having a robust economy, is having strong worker productivity. And so that's the argument, that it makes the country's economy stronger by having more productive, skilled workers who make companies more efficient, and then we can build things like the Apple iPhone and the computer, and that benefits society as a whole. It raises everyone's living standards. The flip side is that there's this idea of, and I think this is kind of what you're getting to, is I think there's been credentialism. And so there's this whole debate of whether college and grad school actually does make you more productive and more skilled, or are employers simply looking at the degree as I guess they call it a sheepskin or whatever, but are they simply looking at the degree and assuming you're more productive without actually you being more productive? And so they just happen to filter out their job candidates by who has a college degree and who doesn't, and that a lot of these students actually aren't productive. I think that there's some credibility on both sides of that argument. I'm sorry, I'm a both sidist.
No, and but the key thing in this case, both sidism, is actually very important, because it's a value, like a lot of this is a values and trade-offs debate.
Yeah.
So it's not quite clear that any one side is correct. And once again, we'll get into the solutions, quote unquote, part here. But I think what makes this debate difficult is we're only talking about $1.6 trillion here. So on the scale of what the US federal government spent, especially post-COVID, this really is a values debate, in the sense that this really could be wiped out, hypothetically. The question, or I meant from a pure monetary perspective. Yeah. This is not like $100 trillion, 50. It's 1.6 trillion.
I think that there's,
fun.
We could talk about inflation though, which I think is very important, and I think, yes, in theory, the government could easily wipe this away. And what would that do with the deficit? I think people's worries about the federal deficit have proven to, sort of be a little, the fears about the government running a big deficit, haven't really come to fruition. I think a lot of people have acknowledged in recent years that maybe those fears were overblown. And so, yes, I see what you're saying. The government can afford to borrow more money and just wipe out $1.6 trillion. But there is this inflation problem. If you give, we've seen, part of the reason why inflation is at a 40-year high, and it's become a big concern, is in part because of some of these measures that Congress has done to transfer money to households. There's trade-offs there that prevented a lot of people from falling into poverty during this pandemic, but it has led to inflation, which ultimately hurts a lot of households, including a lot of poor households. So I would just caution that, again, as you said, trade-offs, it's not like, Congress can simply wipe this away without possible negative consequences. I'm not saying that would automatically happen, but I think we need to consider that.
So I'm glad you brought that up, because this is actually a bit of pushback the audience sent in when Sagar and I talked about this last week. But if the student loans are paused right now, why would this be inflationary? Right. So you could actually argue the inflation has already happened.
Yeah.
Do you kind of get what I mean? So so because there's a pause, and because Biden could hypothetically just keep on pausing it, it's not like the stimulus checks where he's operationally keeping $500 in your pocket, let's say, but he's not actively sending you $500.
But effectively, so I do think it's important, and yes, I appreciate the pushback, because I do think that there is this misconception that, like, if you wipe away $1.6 trillion, everyone gets collectively $1.6 trillion, or collectively households are going to get $1.6 trillion. That's not true. These are obligations that it's $1.6 trillion that would be paid back over 20 or 30 years or whatever. So it's not like a $1.6 trillion stimulus that happens all in 1 year, but it is a $300 a month stimulus. And again, I'm not saying that this would cause inflation to like surge, but I think it's it would be one additional thing. That monthly payment that you otherwise would be spending on student loans, you are now like spending, like that's $300. And I don't know what the typical amount is. I think it's like $200 to $300 is the typical amount that people were sending in for their student loan payments. So it's kind of like a payroll tax, right? Mm-hmm. Where the amount of money that households are getting that they otherwise would be spending on their payroll tax. I think Obama had this. Remember after the housing crash, there was a holiday, a payroll tax holiday. It's the same type of thing. It's not that it may be a few dollars every month, but that does contribute to inflation, I think.
And this is another useful pivot here, because a key takeaway I hope folks are getting from this debate is because the federal and state and college administration bodies are so intertwined in this debate doesn't actually reduce to, do we forgive student debt or do we not? There's actually a lot of things there. And I think a good way of illustrating this is, I think in the introduction to the book, you point out the fact that it's basically estimated that a third of that outstanding student debt is never going to be paid back.
Yeah.
So the way I'll phrase the question to you is as follows: what's going to happen with that? Because so should it be forgiven? Should we change the bankruptcy bit around there? Should the interest be, how should we think? So, because I think that's just a useful way to think about it, which is, look, let's put aside the other 2/3. Mm-hmm. A third, like that's a third of 1.6. I did not take a single math class in college, huge accomplishment. So I'm not going to do a third of 1.6 trillion. Dunk on me on the comments if you want, but that's a lot to money.
About 500, 600 billion. Yeah.
That's pretty pathetic. I did not get that one right. But point is, that's on you, University of Oregon. What's going to happen with that? Because I think that's a very active debate.
Yeah.
That should be a more active frame for thinking through this debate, rather than are we really going to throw money at all these law school grads?
Right. Yes. No, I've made this exact same point to several people this week in other discussions about this topic. And especially when I view it on Twitter, I see these arguments that are framed in like very moral terms, which I totally understand. That's going to happen in any political debate. As you said, a lot of this is about values. But like one of the ways that I frame this is, in my mind and in my book, is like it's more of a practical framing, which is let's look at, again, what happened in housing. Mortgage lenders spent years and years and years, making, or at least several years during the housing boom, just making reckless loans to families to buy houses at wildly inflated prices, with households or, the homeowners just having bad credit or not having an income that would suggest they'd be able to repay the loan. And so come around 2008, like banks saw on their balance sheet that like these borrowers were not going to repay the debt. And they were forced to, not out of the goodness of their heart, but they were forced to have an honest reckoning with their investors. And they had to write off a lot of that debt. And then, Congress passed Dodd-Frank and these other standards to basically reform the lending, to reform the lending industry. Banks themselves tightened their underwriting standards so that they were not left in the same position where they would end up losing a lot of money. And so to me, the way I frame this is that, Congress is and the Biden administration are basically taking a step in that direction. They're basically saying, look, there's a lot of toxic debt on the books here. And whether, we could talk about should or could, a lot of it is not going to get repaid. And so they're kind of doing that write-off process, or about to do it, I think, in the same fashion that mortgage lenders after the housing crisis had to do that. Now, there's a big question. Okay, so then what happens next? Because they're not talking about passing a Dodd-Frank for student loans. And that's I think the big question. But I do think that there is this practical framing in my mind, which is whether you think it's fair or not, it's just an honest acknowledgement.
Yeah. And look, there's a lot of audience skepticism, especially from the left, about Dodd-Frank and whether that was not far enough. Insert statement about not jailing any bankers, not quite my politics, but I get it. But like you just said, there's all this talk of forgiveness, but there's not talk of reforming the system. And I think a really bit of useful audience input that we got here is that for a lot of folks, that's the incomprehensible part. It's not, because like you said, like I think a lot of people really buy into the frame of we should think of this like we thought of the 2008 financial crisis. So there's all this debt. It sucks. It's a sunk cost. Just write it off. What really frustrates me is just seeing very little interest. And frankly, not to get too partisan about it, but just on the Democratic side about correcting the system. And no, I'm speaking to the left listeners here, just saying Bernie style universal free college does not count because that's not on the table. Like, because the key thing about Dodd-Frank was passable. So the question for me isn't like, forgive all the debt and then make it free forever. And then like retroactively pay money to people who didn't go to college. Like that's like basically what the AOC all things to all people solution is, but that's not actually on the table. So like, what is the practical could actually pass a Joe Manchin Senate reform that you could see happening?
So I think one of the things you mentioned bankruptcy, I think both, members of both parties probably, I think could get behind loosening bankruptcy law so that it's easier for students who owe way too much to declare bankruptcy. I think strengthening the income-driven repayment program, there is this program in place that's really supposed to help students. I just think the way it's been carried out has been a mess. That's a whole can of worms, but there are ways to provide just more insurance to students who take out debt. If they don't end up in the job that they thought they would get, they're not going to be burdened by this big student loan over their heads. But yes, I agree. I think that there's not enough attention being given to, what the way forward is. I will say this, I think that, again, when I followed the debate on Twitter, which is always a risk, is I think that people have taken for granted that there isn't sort of the opportunity for a bipartisan agreement here. And I quote Ron Johnson in my book because I went to a dinner where he was speaking about this issue. And I talked with him afterward. He's kind of like a Tea Party Republican in Wisconsin, for those who don't know. And you would think, just based on his politics that he would be one of those Republicans that would say, no, it's the student's responsibility to pay for this. But he actually told me, he kind of sounded like Warren, where he's basically like, it's really a tragedy what we've done to an entire generation of students. That's what he said. And I'm paraphrasing him, but I quote him in my book. But, point is that like, there are people like him. I think that there are Republicans as well as Democrats who would agree that this system is a mess. And so, and on the one hand, with this whole discussion of forgiveness and this whole renewed attention that's happening on student debt that really only started to occur in the past 5 years, I am a little bit encouraged that there is actually a discussion happening. And so I think there is some hope there. But yes, as of now, there's so much focus on what do we do with existing debt, which versus how do we actually reform the system?
Because the awkward political jujitsu here is that any IMO, any reform of the current, any mass forgiveness, alteration of debt restructuring, a huge part of that political package will have to be something moving forward. So ignoring that fact is just a real, I think is a real misunderstanding of the political weights. A quick idea. We've got good 3 minutes here left. I just want to go over with you real quick because it's new favorite on the American right, mostly because of tensions within higher education, debates over wokeness, like those different bits, like the endowment tax to pay down debt. And the thing then I just want to editorialize for a second and then get your response to finish this up. The thing that I'm realizing when I'm talking to you about this, and this is why, once again, like you said, the focus on the practical is helpful here, is that yes, it's true that Harvard and Stanford have like massive endowments, but even if you had some sort of tax, that wouldn't at all put a real dent in the overall sheer massive debt here. But B, and this is the awkward thing, you could say a million different things about Harvard, Yale, Princeton, Stanford. They don't seem to be the root of the problem here, in terms of they're not organizing predatory loans. They are not ill-serving students. They have excellent gainful employment rates. They have excellent, let's just say, completion rates. So my reaction here is that I get why conservatives, because of culture war issues, want to go after higher ed, but I'm just seeing these numbers. I'm like, yeah, like that's not like that pretty much plays no part in this. But I'm just curious how you think about like that. It's just like this was the number we asked for solutions. This was the number one thing that folks wrote in saying they are like, I'm as right wing as they come. Screw Harvard. Let's tax that big endowment.
Okay, no, this is great. So, again, I try to avoid saying Congress should do this because I am a reporter. And so, I don't play the role of activist here, but I do like to expand the conversation and sort of, offer some thoughts that I've had as I've reported on this over the past 10 years. And, I'll give you a story, and I think it'll sort of answer your question. I one time wrote about an orthodontist that has $1 million in student debt, and he went to the University of Southern California. And so I would push back a little bit on this idea that these prestigious colleges are not part of the problem. I think that they're actually a big part of the problem because they are often charging exorbitant amounts. Now, yes, a lot of them have good track records on average, but there's a lot of students that are outside of the average that are not able to repay their debt. They have to go into income-based repayment, like this orthodontist. He went to University of Southern California for 7 years. And, I asked the president at the time, his name is Max Nikias. He's no longer the president of USC, but I said, look, you have this huge endowment. If you are so convinced of the excellence of your product, why don't you put your money where your mouth is and use some of that endowment money and lend to the student? Because you're so confident that you're providing such a good product. If you're essentially investing in the student, and just have the student pay you back rather than pay the education department back, which is essentially their third-party lender. And he goes, one time my budget advisor, I think it was a CFO, he told me that years ago. He goes, there will be a point where tuition on its current trajectory is going to increase to such an extent that Washington's going to get really pissed off at us. And we may want to consider just leaving the student loan program so we don't have to face that political pressure. And I said, well, why did that never happen? And he goes, because we haven't had to up to this point. So, for me, yes, I agree with you. An endowment tax is probably more symbolic in terms of solving the problem. But I will say this, again, before the federal government got involved, there were a lot of colleges that directly lent to their students. Default rates were low because colleges actually had their own money on the line. And so I think one potential solution here is I'm skeptical of Congress micromanaging the colleges through rules and what have you. I think that they've tried that over the past 50 years. It just simply hasn't had the results that I think anyone wants. But I do think that, like, if you look at what's worked in the past, when schools put their own money on the line, they are much more reluctant to raise tuition at triple the rate of inflation and give students debt that they know are not going to repay it.
Excellent. Josh, this has been really great. Thank you so much for joining us on the Realignment.
Yes, this was fun. Thank you.